Hi, I'm Jerry Bowyer. This is the Eagle Investing Network. If you haven't hit subscribe, now's the time to do it. If you have hit subscribe, now's the time to share this YouTube channel with somebody else. All right, let's talk about profit and business sentiment. I'm going to tell you about a number that you can look at that gives you a much better idea how the U.S. business sector is doing than almost every other number you can look at. But first, let's start off with profit. So we're going to look at the data. Now, if you watched my last video, you saw this. This is profit. This is the percent change from profit a year ago. And we see, of course, the terrible profit collapse during COVID. Remember, this is a lie. A business was still producing stuff that was showing up in the economy. They were creating wealth, but it was in inventory. Therefore, they weren't selling it. Therefore, it wasn't showing up in the official profit number. But that was just a matter of delay. Then they start to sell again a little bit. And then, stop, you're going to shut things down. And then as things are allowed to be sold, as you're allowed to buy, then a lot of this frozen profit becomes unfrozen. And it's a flood of profitability. An artificially high number making up for an artificially low number, and then on into the new normal. Now, of course, you have to wait a while to find out what profit is. Wouldn't it be great if you knew what profit was when it was actually occurring? But you don't know that. You have to wait until the end of the quarter. It's a 3-month period. And then the accountants have to get together and do all the profit numbers. And then they release them in earnings reports. And then the government gathers them together. And that might be 3 months after the actual time period that's in question. So can you get a better idea of what's going on earlier? Well, let's go on to another piece of data. This is the Purchasing Managers Index. I like to call this the mood ring of the people who are actually running the economy. So this mood ring is a survey. Hey, people in business who are, in this case, running the manufacturing sector, how are things going? Things are going very badly. This is 1980, pretty deep recession, arguably even a depression. We feel a little better maybe about the election results. I'm not going to go through each of these. Oh, wow. This is the Reagan boom, and on it goes. And of course, the Great Recession, collectively, everyone was pretty pessimistic. And they were right. Things were bad. But they came out of it, and here's the COVID depression, and things were bad, and they were right to reflect the fact that things were bad. So here what's going on is, we don't know if the economy is ever going to open up again. So what we're going to do is we're going to build less stuff, and they did build less stuff, but we're going to build some. And then, we're unfreezing. People are buying. Oh, people are buying. Wow, this is great. We built a lot of stuff, and they bought a lot of stuff. And then, wait a minute, they're still buying and we're having trouble keeping up. So this is the supply chain problem. Right here, we see the supply chain issues. So this is when they have a lot of stuff on the shelf and it's being purchased. So down here is we've got stuff to sell. Will anybody buy it? Here is people are buying. Will we have enough stuff to sell? And this is actually a really good measure of how business is doing at any given time. And what I really like about this particular statistic is it asks them the same month. It's like, right now, how are things going right now? Then they report it a couple of weeks later. So you're not waiting 3 or 4 months to figure out what's going on. All right, let's go on to another piece of data, which is to break this down into individual dots for individual time periods. And then we rearrange it. And that rearrange is now in order of from left to right is no longer time. It's the actual index. So over here is extreme optimism. And over here is extreme pessimism, like we saw in 1982. We were pretty worried around then. And we had a recession in 2001. And this is business. And here's where the line is currently. Okay, so what's going on over here? Well, maybe I need to explain what a scatter chart is. You're comparing one factor, the mood ring of manufacturers, to another factor, which is what does it turn out later that GDP growth was that year? And we see clearly there's a relationship. It's not perfect, it's not right on the line, but clearly when they're more optimistic, the economy tends to do better. When they're more pessimistic, turns out the economy was actually doing pretty poorly. And what this is saying is, as of right now, let's say as of the time of this PMI, so this is March. As of then, This is the level of optimism which is consistent with 4% GDP growth. Now, I need to explain something, which is that this is manufacturers. Manufacturers have been doing better lately in the COVID economy. This is another thing you have to take into account of this crazy COVID economy, where a factor which usually is pretty reliable, you have to kind of look at it a little bit differently. When the economy shut down, we stopped going out for experiences and we started ordering things to be delivered to us at home. Those are manufactured goods. So there was a shift towards manufacturing away from experience and services, which means part of this optimism is just reflecting manufacturing optimism, not the optimism of the overall economy. Now, what we're going to do is we're going to take a look at another piece of data. So remember, we just showed you this. That was the dots in the scatter chart. This is the mood ring of the manufacturers. And this, go back a couple of videos, and you'll see that supply chain metric that we calculate. This is what's going on in terms of business productivity. And it makes sense. When business productivity is dropping, business managers could have told you that in advance. We get these numbers like 3-4 months later. But here we get these numbers almost in real time. So as things were declining and getting worse, business managers knew it before people who depend on government statistics. As things were getting better, business managers knew it, and this wasn't released until much later. So it kind of looks like you're finding these out at the same time, but you find these out almost in real time, and you find these out after the government has done a whole bunch of statistical analysis, and they put it through all their models and everything, and then you have to wait a long time in order to get it. So the kind of topping out and sort of returning to normal. Yeah, that's high, but that's low. So this is a period of sort of normal. Well, that's sort of normal business growth. Decline, some decline in business, popping up a little bit, an increase in business. And then what's this going to be? Right. This is, this is the fourth quarter here. So that's this is the first quarter here. We don't know what that is yet, but the data from the managers is telling us that this is probably not going to be very good. So why am I telling you all this? I'm telling you because these people have skin in the game. They're managing the businesses, and you don't have to wait a long time to hear what they think. They're going to tell you where we really are in business long before the government statistics. Now, my friend Mark Skousen, who created gross output, which we used to calculate business activity, he keeps telling the Bureau of Economic Analysis, put these numbers out earlier. Well, maybe they'll listen to him someday, but until then, we can get a pretty good idea what this is going to be by looking at this. I'm Jerry Bowyer. You've been watching the Eagle Investing Network. If you haven't hit subscribe, now's the time to do it. And if you have hit subscribe, now's the time to tell somebody else about this. Thanks for watching.